Oh man, stocks reaching new lows and new lows and new lows. And in this video, I want to talk about several different things in regards to stocks, what I'm looking at right now in the market and how I'm thinking about this. And I think this is going to be a very important video. Nonetheless, I'm glad you guys clicked on this one because this is going to be a good one, all right? By the way, if you haven't followed me on Instagram, make sure you follow me on Instagram, Financial Education Jeremy. So if you never heard of a gentleman named Peter Lynch before, look him up, maybe Google him, okay? Peter Lynch, one of the best investors of the last 50 years in the market, just tremendous guy. I've really kind of, learned a lot about Peter Lynch. I've always known about him in the market, but I've really done a lot more research in the past, I would say 6 months on Peter Lynch, watching a lot of old interviews of Peter Lynch, things like that. Just an amazing guy that could just describe the market in an amazing way. And there was an interview I was watching recently where he talks about, an old investment he had, this is like decades ago, Dunkin' Donuts. And he ended up making a really, really great return in Dunkin' Donuts. Not a complicated stock at all, right? Like Dunkin' Donuts, are you kidding me? And he got this tremendous return in Dunkin' Donuts. And what he talked about in that video is he said, hey, when the market gets rough, when stocks are reaching new lows, when, there's all this drama, I would go to Dunkin' Donuts and I would say, hey, look there's customers in here, there's people buying stuff, things like that, right? And, getting out there in the real world sometimes just gets you to figure out, oh, these companies aren't crashing. Oh, they're actually in a pretty good place. And so I thought, wow, what if I go ahead and do that? And so where have I been the last 2 or 3 hours? I've been driving around Las Vegas, okay? And not like the Hangover style, okay? I've been going to some of my investments. So I go to Walgreens. It's as busy can get in that place. That's all I can say about that. A lot of people getting, pokes. A lot of people getting a lot of stuff. If you don't know, man, there's a lot of crap going around out there. Stay healthy, people. That's all I got to say. And there's a lot more stuff going on out there than just Rona. But nonetheless, Walgreens are dang busy, okay? And with all these stocks hitting new lows, I'm like, let me go see how business is. So I go to Target. I don't own Target stock, but I do walks around Target, several Target stores every single week. And the reason I do this is because several companies I own, they have big relationships with Target and they get significant amounts of their revenue from Target. Okay, very, very important client for several of my companies, 3 in particular. So first thing, I go walk around the honest aisles, okay? And what do I see? Outs all over the place. Like product sell-through is ridiculous. I go to these stores all the time. I see the inventory come in. I see the inventory go out. And just product selling amazing. And based upon the valuation, you would think the company's the worst it's ever been, right? It's at all-time lows. You'd think the company would be at all-time lows. Oh, no. Business is strong like Donkey Kong. Wait till you see the numbers, okay? And, it's just wow, getting out there in the real world. And no, it's not the end of days for Honest, okay? I get out there and I see Oatly, which is a very, very new stock I just started buying very recently. And go to the Oatly case, and the sell-through is just ridiculous for Oatly. A guy literally right in front of my face buys Oatly right in front of me. That was just kind of a funny moment there. And Oatly, sell-through is just off the charts, okay? I had to get my Oatlys and had to go way to the back to get those dang things, all right? Tattoo chef, you would think this business is at all-time lows when really the business is better than it's ever been. And not just better, but massively better than it's ever been at any point in its history. I even took a picture I posted in the Discord chat, which we have a category in my private stock group in the private Discord chat, which, by the way, if you're interested in joining that, check out the first link in the description down there. We always post photos, and I post this photo, and it's sell-through is ridiculous. They got this new deal going on, buy one, get one 25% off for the new year. A lot of people like to pick up healthy diets in the, starting off the new year, try to get obviously we know we got a health epidemic going on in the country, much worse than Rona. There's an obesity crisis in our country, and there's a lot of other, we're in a health crisis. Let's just put it that way. Like so many folks have been living such unhealthy lifestyles. It's awful, really. And it's costing our healthcare system a fortune. It's costing people decades off their lives, and it's really sad, actually. And so during this time of year, some more people try to get onto healthier diets and those sorts of things. Some people fall through with it. Some people stay on, and that's great. But nonetheless, the sell-through is ridiculous for the chef. It's at a better place for the company than it's ever been before. Just tremendous. This wasn't my pictures here. This picture is somebody else in the private stock group posted this. Their Target has now 2 full doors, and it's selling like crazy at their particular Target. And that's just what we're seeing, to be honest, straight across the board, right? And so you're going through this and you're seeing these stocks at all-time lows, and don't ever think the stock price is reflective of what the business is actually doing, because when you actually get out there to the real world and you realize, oh my gosh, these businesses aren't in a bad place. They're actually in the best place they've ever been. Honest is in the best place it's ever been. Tattoo Chef's in the best place it's ever been by a mile. And Oatly's in the best place it's ever been by a mile. All three of those businesses are better than they've ever been before, and by a lot. But their stock price says completely the opposite, okay? And that's where you start to get real opportunities. Now, you start to hear the Fed. If I had $1 for every news article that was written about the Fed today, I would be buying more Tattoo Chef stock here today, okay? But nonetheless, the Fed is the talk right now. And I've been in the market for 14 years now. And I can tell you this happens all the time. Almost every year, at some point during the year, the Fed begins to be the talk. Are they going to taper? Are they hawkish? Are they dovish? Oh, the Fed. What are they going to do with rates? Every year, the Fed is, at some point during that year, it is the talk. And right now, right here at the start of 2022, what is the talk? It is the Fed. Everybody's talking about the Fed. Everything else is just, nothing even matters right now for the stock market and what the attention is on other than the Fed, right? And this is something I love here. I saw this posted. Somebody posted this on Twitter. New York cartoon from the 80s. On Wall Street today, news of lower interest rates sent the stock market up. But then the expectation that these rates would be inflationary sent the market down, until the realization that the lower rates might stimulate the sluggish economy pushed the market up, before ultimately went down on fears that the overheated economy would lead to a reposition of higher interest rates, right? And that's the truth. Like, that's the sad part. That's the truth of the Fed. And the market drama is you get into this sort of market, and it's like, well, if they raise rates, then that's a bad thing because it's going to hurt growth assets, right? But if they're raising rates, that means the economy is really strong. If they don't raise rates, then people can look at that at the same token and say, well, that's good for growth stocks. But then they say, well, if they're not raising rates, then that means the economy's bad, right? And so this is why, it's comical. It's literally comical for somebody like myself that's been in the market for a long, long time to see the Fed talked about, because it's just a joke. That's, to be quite honest, because it doesn't matter what the Fed says, you can twist it to be negative. It doesn't matter what the Fed says, you can twist it to be positive. It literally doesn't matter. Literally, whatever way you want to look at it, you can take it as a positive or a negative. And the market just kind of looks for the Fed for reasons to either sell off or to buy stocks. It's just a flat out honest truth. At some particular times in the stock market, the market fund managers, the people that are running it, the algos, everything like that, they're just looking for a reason to sell. And so they use the Fed as that. And on the flip side, when they're ready to buy, okay? And, with nowadays, especially a lot being driven by algorithms, the market just can be extremely irrational, just completely irrational, right? And this is kind of moments that you gotta just focus in on what you're doing, making moves out there in the best stocks possible that you love for the most for the coming years. Because at the end of the day, all this Fed talk is just a bunch of BS. That's all it is, man. That's honestly all it is. And a month from now, a few months from now, that's all going to be way in the past. We'll be on to some new thing, right? And the market will move wherever the market's going to move. But at the end of the day, when you see assets that are trading at all-time lows, when things are actually better for the fundamentals than they've ever been, they're at all-time highs, right, in terms of the fundamentals, that's when you know you got to load the boat. And at the end of the day, if you go down more, you go down more. That's fine. At the end of the day, if you're in the right assets, you're going to make a ton of money. You're going to make a killing in the end. So what's it matter? You know what I mean? Like when I first started buying Tesla, I didn't buy at the best price. Stock went down 10, 15% after I bought. At the end of the day, I still made a killing. Like it didn't matter. You know what I mean? It still made several $1,000% in that stock. So, when it comes to these stocks, whether it's a stock that you think has 1,000% type return in front of it, or whether it's a stock you think could 2x over the next 5 years, regardless of what that is, you buy it. If it's an undervalued asset, you buy it. Okay. And the more undervalued it is, the more money you make in the end. And the rest is just, that's all it is in the meantime, guys. So yeah, I hope you appreciate a video like this. If you're looking to join us in my private stock group, check out the pinned comment down there. Also be linked in the description. Much love and have a great day. Don't forget to subscribe.